Hello and welcome to The Outsider's Point of View. You heard it, it's not from the helm. It's an exciting new idea that Hedley and I have had to talk about the markets, what we're seeing at the Conference for Resources Rising Stars, and kind of put our brains together to talk about the commodity cycle that we're in right now. So Hedley Thomas of Lion Selection Group, thanks for joining me.
Thanks for having me, Grady.
I thought, why not join our brains together? We're the ones that talk about the market, but we never talk to each other. So it's exciting times.
It is. Well, and you've done a great presentation this morning.
Thanking your tomorrow.
I am. And I think what we've both been touching on is, you know, what's our observations of what's going on in the market at the moment? Because that could be a buy signal or a sell signal.
Or a hold on the sidelines.
Yep.
So just like us. So let's start with the basics. What's your commodity of the minute and why?
Well, look, I'm really attracted to copper. I think it's got fantastic long-term fundamentals and it's softening at the moment. So, you know, that's creating opportunities. That's interesting. Unlike some of the others, there's not so many opportunities in copper, so it's a slightly harder one to play. But, you know, copper is essential to the new world and to the old world. So, and it's a big market. It's a fabulous commodity to be involved in if you can find the right play.
Definitely. Now, for me, it's probably gold right now. I know I spoke about it a lot this morning in my keynote, but the gold upside potential is still there. And speaking to those at the helm, there is still a long runway to grow. Even in the hedging platforms, we were talking to Alkane Resources before, and he was saying that you can buy hedging instruments 4 years out that are at 4,500 Australian dollars per ounce.
The way you get to that price, that future price, is it's like the gold price plus an interest rate. So if interest rates are high, it inflates that. So they're risk averse, but it enables companies which aren't so risk averse to say that is still attractive.
But they're heading into an interest rate cut environment, so that naturally drives some tailwinds for gold. So for me, the drivers of gold right now are obviously banks around the world buying up bullion. You've got the People's Bank of China buying up a lot of bullion. I think they bought the most out of any central bank in the last quarter, which is just incredible. They're obviously diversifying. Then we've got geopolitical tensions rising. That naturally drives everyone into the safe haven nature of gold. Gold holds its value. We've got the US election coming up, which is putting a lot of tailwinds behind gold. There is undersupply. The list goes on. It's just incredible how much room there is to grow for gold. I don't think this time last year we were talking enough about gold. It wasn't even anywhere near on my radar as it is now, but that's definitely my commodity of the minute.
You know what I think is interesting, just to riff on the gold theme is if you're a buyer of copper or if you're a buyer of lithium, it doesn't matter what it is, they're all commodities which have a value in use and you have to pay for them and then you have to pass that price on to end consumers. Whereas in gold, there is no price in the world which is going to stop someone from buying it. If they want to buy it, they will buy it.
Exactly.
Because they're buying it for a purpose, not for a use. And,
exactly.
So to me, you know, could gold go up 2x, 5x, 10x in a cycle? Well, it could be any of those.
The sky is really the limit. I think the market is really showing that right now. And all-in sustaining costs, that's your key measurement of costs in gold. And that's kind of breaking away from the gold price and it's not growing as much as the gold price. So that's really kind of pointing to the fundamentals behind the margin appreciation that we're seeing for a lot of gold miners out there. Northern Star, classic example, record results in FY24. So on that front, what is your stocks of the minute in the copper space?
In the copper space, I think it's a harder one. I would have to say that there's a region which is interesting and there's a couple within it and one of them is here. So I've been spending a lot of time looking at the North Queensland area and there is stacks of copper out there. I've done a couple of trips where you go from, say, Duchess, which is southeast of Mount Isa, through to the Cloncurry Road, and you drive through a couple of ghost towns on the way. I mean, you're only going 100 kilometres on dirt, but you pass through some amazing stuff. And there is copper sticking out of the ground everywhere.
Wow.
Now, you've got Hammer, who is here, and they are sort of neighbours with Carnaby. They've sold some ground to Carnaby. So, you know, there is a development concept which might be falling into place in that part of the world. And I don't know how to play it yet, but that is an area which I'm looking at very closely because I think there is something which can come together there now. And there are a few other names in the area which I think are interesting.
And other stocks on your radar that aren't necessarily copper?
I mean, to your favourite commodity, gold, one thing I love about gold from an investment perspective is that if you're investing in a company that wants to dig gold out of the ground, it's one of the easiest things to separate and to sell. I mean, if we were gold miners now and if we were mining gold down there, we could sell it out there. So you don't need a dealer.
Exactly.
So we've got Bright Star Resources here. That's the second largest deployment that we've put away in Lion in the last couple of years. So second largest investment for us. I just love the outlook that they have a genuine case of being able to extract ounces from the ground in order to sell the ore. They can use that cash flow to grow their own proposition, and eventually I think they could become an owner-operator of a mill. They have one. they can reinvest their cash flow. So
Yeah.
this whole concept of having to invest a lot of capital to become a gold miner, they can sidestep.
Yeah.
And I think they're doing a deal now, which I think will position them to be a multi-million ounce gold company as well.
Incredible, isn't it? I think for me personally, in the gold side, I'm in Spartan. I think Jesse and I, our videographer, we went to Spartan and we both looked at each other and said, the potential is just here. It's a story behind it. It's the fundamentals behind it. The grade that we're seeing, as Simon says, he's looking to rewrite the kind of scope of what is high grade, because the grades we're seeing are just phenomenal. Like you see the rock he's holding down there, it's literally gold right there.
Yeah.
So the ore body's massive, Never Never, Pepper, amazing, fully funded, no debt, which is what you want to see in a miner in this territory, in this kind of day and age. And it's one on my horizon for a while now, but also develop global. I know Bill Beeman spoke before, but the mining services for me is such a draw card for that, for investment and attracting investment into that company, because as we've seen time and time again, a lot of miners are tied to that commodity cycle. And nickel, for example, has been so under or depreciated, the nickel price, and that's really dragged down a lot of the key miners who have really good assets and really good deposits and are doing really good things. So I think for me, the mining services that Bill's got going on that underpin the revenues and enable them to continue to develop the Woodlawn project is just incredible. So
it gives them a reason for being without having to
Exactly.
depend on an asset going forward at a
Yeah.
great rate. Now, it's not to say that their assets aren't going forward, they are.
Exactly.
But being a mining contractor, it makes them unique, it gives them revenue, and it enables them to support all of their head office costs
Yeah.
without having to do that via capital raisings and things like that. So
now, we did speak about our miners of choice right now. How do you pick a miner?
I think there's several things ingredients into that piece of the puzzle, but for me, it's a risk assessment, evaluation, and a people appraisal.
Yeah.
So we want to work with people. So when we invest, we see them as joining our team and
Yeah.
we're joining theirs. It's not a formal thing. It's just we need to have that relationship.
You do. Transparency is key.
And I mean, there are lots of things which present a really interesting valuation piece, but then when you do the risk assessment, I think this is the part which a lot of investors don't get to. You've got to make sure there's no existential risks there. And in some things, I mean, the lithium boom, which we saw a couple of years back, one factor for me was that there were some very highly valued exploration companies.
Yeah.
They had lithium, yes, definitely, but could they produce a product and could they sell it? And that question was never answered. And
Yeah.
with some of them, it never ever will be. So that presents an existential risk. New-ish commodity going into a market which is growing rapidly.
Yeah.
They're all difficult things to solve. So they're the three pieces of the puzzle for me. But you were talking about that this morning as well, Grady.
I was. There's a lot that goes into mine. I think it's more the fundamentals behind it. So there's a lot of, obviously for gold, it's all in sustaining costs, but across the board, it's costs that go into it. So if your costs too high, if you're not managing funds very well, obviously that's kind of a bit of a red flag. But margin appreciation, timeline to production. So you don't just want someone exploring, drilling, and no actual timeline to when they're going to turn that drilling and the assay results into some measurable and meaningful product that they're going to sell. Hedging versus unhedged is another big one for me. So a gold miner hedged in this current environment, not a strategic move, because obviously they're missing out on the potential upside for the sales they can get on the spot market. So that's one that we're going to look at, or want to look at the time. Management team, have they done it before? We don't know. Have they done it in that commodity before, or have they done it really well in another commodity and they're trying to switch over? That's another thing to consider. Obviously, the institutional and big bank names on their shareholder register. If you've got some big bank backing or you've got some institutional names, shows there's a bit of credibility there and a bit to look at. Obviously, not for shorting reasons, but if they're really interested in the story, then that's obviously something that you want to look at as well. Amount of cash, then you want to look at their debt levels as well, and obviously their runway to profitability, because at the end of the day, we all want to make some money.
I think the management piece is an interesting one, and it's something which I get asked most commonly around this conference is, how do you spot someone who is a good person to follow versus the alternative? And until you know them and until you've spent time with them, it's really difficult to answer that. And sometimes a person needs to be put under pressure before you can understand whether they've been, high sincerity and integrity and capability and all the rest of it. But one thing which you mentioned is, do they have an institutional following? Have they managed to satisfy those people? That's probably as close as you can get from a retail investor's perspective. Have a look across the register and see who else is there, because there could be ticks of approval, or it could be a collection of snakes.
And I think as well, looking at how much of a holding the CEO, managing director has, and if they're selling it down, doesn't instill that much confidence, does it, looking forward?
I think that's a rule for many investors. If you see a CEO sell, that's a signal that you should probably...
It's a signal that they're going, oh, it's time to get out. So that's something to definitely consider.
Yep. Well, there's always an excuse, a tax bill or something else. But at the end of the day, if that stock was so meaningful to you, you would not sell it.
No way.
I understand people's financial problems.
Oh, people need to get their money back for sure, but not 100% of your sales, right?
Correct.
So trends in the market, what are you seeing and what's happening on the sidelines?
We've shifted from huge interest in lithium, let's say 2-3 years ago, and at that point in the market, you couldn't sell a gold stock. No one cared. And if you were looking for a gold deposit, or if you even had one, it was like the stinkiest thing you could possibly be. Whereas now, people are flocking to it. So in the last 2 years, that's 90% of what we've invested in is gold. And it's not because we saw anything coming, it was more on a risk-adjusted view. They were the best places to be in the most attractive investments. So what I'm seeing is a sudden awareness of gold. But one thing I don't understand is, what does the rest of the market think? And I don't know, from a Bell's perspective, you would probably see a little bit of what the market is doing. So is there anything you can comment on there?
Yeah, so we did get some data before we had a chat, and it's looking like the holdings, so investors sitting on their holdings, is declining, but the trading volumes are increasing. So what that says, it speaks to the sentiment of the moment in the market, right? That everyone's kind of not really taking risks, but they're just kind of dabbling and just trying to see where the next opportunity is without putting their whole investment in and sitting and holding anymore. It's about playing the quick game, not the long game right now.
It's not all on black just yet.
It's not all on gold just yet.
So I think that bodes pretty interestingly for the future, though, because there's obviously a lot of money which is active. And when something really grips, and gold looks like something that could.
I think it will,
where will it go from there? There's big potential backing could swing in quickly.
Now, I can't let you go without telling us your famous what time on the commodity cycle clock is it right now?
So we operate a clock which is driven by liquidity, and this is just to measure, is the market for mining coming or going? And we all know it goes from boom to bust, boom to bust, boom to bust. That's what we're trying to portray. And we monitor that. There's a number of things that we monitor as cycles go by. Right at the moment, our telling of the time is that it's 4 o'clock.
Okay.
Now, the boom starts, the very, very fledgling signals of the boom start to happen at 6 o'clock. So
we're getting close.
We collapse from 12 round to 6, and then we improve from 6 round to 12. So our view, and driven by liquidity has fallen out of the market, it hasn't built back up, but there's been a couple of episodes where copper and gold started this year, gold now, are provoking little bubbles of liquidity, and that says it hasn't disappeared, it's trying to sneak back. But we're also seeing the major miners looking to consolidate. They're looking at doing deals, and that is always something which is capable of provoking liquidity in the market, because retail and insto investors are led by the industry. If the industry starts buying, the market will as well. So we say 4. I don't know how long it takes to get to 6, but that can progress quite quickly. And it could be that you need to see some capitulation in the broader market. But one thing that I'm very aware of in this cycle is that next time around, we know that there's the energy transition. There's a huge lack of investment that's taken place in the last decade. So the mining industry is not well prepared to respond to a huge demand boost in commodities. So when that comes, historically, when we've seen a really great commodity picture, like a gold rush or a China rush, money rotates out of other places to buy commodities and gold miners and things like that. So you see money perched in tech, you see it getting nervous about things like Nvidia, and then you see this commodity theme coming. I think the next boom could be something special. So I'm very optimistic about what lies beyond the next year or so.
Let's wait for the next 2 hours to come. Hedley, thank you so much for your time today, and I hope you enjoyed that episode of From the Sidelines, our new series starting at the Resources Rising Stars.